So our panelists are here. Let me have a big round of applause for all of them. We had some great speeches, great recommendations. Paul, thanks for being with us. Benj, thank you. James, it feels like a long time ago that you were here. You were on stage, did a great job. And Victor, of course, Victor, as you know, is with me every week. Kicked off the whole conference this year, as usual. Does nothing but help out. So I just wanted a chance to maybe if we could sum up what we think we're looking at. Any, I'll give you a broad question and take it anywhere you want. I want to start with your biggest worry for individual investors. It could be more broad, whatever you are. Your biggest worry, biggest mistake you worry that people make as we come into. I think we all agreed there was a lot of volatility ahead of us. So let's start with you, Paul, if you don't mind. The biggest worry when you just think of individual investors, if you were giving advice to your niece, to your nephew, family members, biggest worry. Is this working? Yeah. I don't like that question. Okay, let's move on to another. We'll ask it to whoever's name I couldn't read in the last draw. Let's phone him now and ask him.
I mean, there's so many issues out there. I think geopolitical risk, what's going on in this world, can always blindside us. That's enough. I do worry about the financial crisis out of Europe. That's, as we talked about, what is the euro? Is it still an experiment? How's that going to work? When's Italy going to declare, bankruptcy? And I think that'll be that kind of financial shock is what I don't think the markets are anticipating. Excessive debt.
I think it's important people know the context of which they're investing. That to me is an overriding risk context that, I agree with you, isn't taken fully into account. Benj, how about yourself?
Well, the first thing I want to do is say thank you to Michael, Grant, Annabelle, and Nina. You guys put on a super conference. It's my first time here. It's been absolutely wonderful. I'll just mention one other thing people have been asking me about how they can subscribe. Go to contratheherd.com, CONTRATHEHEHERD.com. But in answer to the question, debt levels are insane. The Canadian debt level, deficit, US debt level, deficit, we go to many other countries. At some point, I would think you're going to have to pay the piper. I would have thought it would have been by now, but obviously it hasn't been. But during what I would call reasonably good times, and I don't think the times are awful now when you look at the unemployment rate, it's way down. But the governments just keep on adding debt onto debt onto debt. And it seems like nobody in the government wants to attempt to take control of it. So at some point, this will come to bite the government back in the butt, bite people in the butt. And it's an absolutely major danger. And that could lead to a real spiral.
Great, thank you. Yeah, you.
Chuck.
Sorry, you should have said.
Yeah.
You should have said Jimmy.
Yeah, Jim, there you go.
Sister phoned me and asked me.
There you go. Good Scarborough boy, just like the coach of the Canucks, right? Yeah. First off, great conference. Thank you, Annabelle, and everybody. It was great. A couple things. Yes. First off, it's debt. My focus more is what's happening in China. I think we could have there's deflation, and you've got major property developers going bankrupt. That's one. They have to reflate. There's just too much debt. In March, we have a possibility of a regional bank crisis in the United States that hasn't been solved. We have commercial real estate crisis in the United States and Canada that hasn't been solved. So I think cooler heads will prevail, and that will drive reflation and quantitative easing and rate cuts. I think for investors, I think the biggest mistake you make is trying to trade the market. Roger Federer, only won 53% of his points when he was playing. Investing is about being in the market. Investing is about taking the long view, and investing is about doing good research. So that would be my first thing that I would say to you. But yeah, it's debt. It's we've got craziness going on in Washington and in Ottawa.
Great. Victor?
I'm a short-term trader, so I have a little different view here. But I'd say, I think the market is way more fragile than what pricing would indicate. By pricing, mean particularly vol across assets. Vol is cheap. And, any number of these things, like Jimmy just mentioned, China, I did a spot a couple of weeks ago. I said, you know, what's happening in China? It's grim. So I think, to keep it simple, the market is underpricing risks that are lurking out there from any number of things. And that's my opinion.
Let me ask you this, and it might be just a follow-on to what you've just answered, but what do you worry is going to be the big surprise? Like, for example, for me, I still think the geopolitical risk is completely underestimated. You know, when you look at how, and because if you're relying on the mainstream media to inform you about what's going on in that area, they've missed about 48 different conflicts that are going on at this moment. You know, I think they misunderstand. My own experience is it's not from some sort of negative kind of approach. They just don't understand. But I think so for me, I just think we have to be aware of what risk we're taking and the geopolitical risk. So, what do you think we're underestimating, or surprise is a better word? Because it could be a surprise to the upside too. It could be a good surprise. I think you want to start off.
I just carry on with what I was just saying. I think the market's underpricing vol. And by that, I mean, I see
Volatility,
there's
sorry.
volatility. There's products out there these days that is, they call it yield enhancement, and they're overwriting, basically embedded positions. There's a complacency in the market, so people are selling the hell of it. They think it's free money, and it is many times. Most options expire out of the money. But we've seen vol Mexican or whatever it was called a few years ago, when vol was close to the upside. When one thing breaks, then a bunch of things break, and it would come as a storm. So in terms of a trade that I would be making, I'll be looking for like a fall explosion to happen. That could be, for instance, in these markets, let's say crude oil gets hammered down, I might want to buy calls in fall. This is going to be buying options, so that's a positive convexity, which means I've got limited loss on if I'm buying an option, and I've got unlimited gain. So that's a kind of a strategy I'd be looking, and essentially, this may sound cruel, but this is how it works. I want to be the other side of the trade when everybody's wrong.
Jimmy, what about you?
So, as I said in my presentation, I think you have to make a decision on whether they're going to blow this thing up, whether they're going to come in, support it. So my view is that they're going to cut rates and they're going to reflate. So my view is that we're going to be in a global deflation trade until the end of 25. Risk assets are going to be the place to be. Artificial intelligence, the market's going to get very narrow. And so I just don't see them, if they wanted to blow this thing up, they would have done it in 87, 97. I do think the hardest thing about macro investing is not identifying the event. We know that there's too much debt. We know that there's no free lunch. It's the timing. So I think, in my view, the timing of the big, come to Jesus moment is going to be next decade. So,
Oh, good. I'll be dead.
yeah.
I'm
So
predicting that.
Yeah. So like, I think inflation, and I think people just aren't exposed enough, and and just walking the halls and talking to people. Why I get pulled up is because the majority of people don't agree with my point of view. So even if I'm not a investor, right? When I sit there and say, buy the NASDAQ 100, buy Bitcoin, right? This thing's going to go higher. We've got the reflation, we got the credit cycle, we got the presidential cycle, and we got the Bitcoin halving cycle. No one's going to believe it. And my whole point to you guys is that if you don't believe it now, please don't buy it in the end of 25, because that's when I think 26, which is a midterm election year, we're going to have your typical 20 to 25% correction.
So, Ben?
Okay, I'm debating back and forth whether I should say this. I want you to know right off the bat that I'm not anti-immigrant at all. I support immigration. I'm not anti-immigrant. But there's so many people coming to Canada now, and so many of them need support. And I think at some point it's going to come back and really bite us. So yes, we could want more people, but it's a bit like a funnel. You can only allow so many in at a point in time. So I'm somewhat concerned that there will be a backlash against immigrants. I do not advocate that in any way, shape, or form. But looking at what's going on here, and looking at the government's financial situation, I think we should slow it down somewhat. And I know the arguments, the boost the economy, et cetera, but I do think we should maybe slow it down somewhat and stretch it over time. And part of me does not feel right at all about saying that, but I think you're going to see in 10 years' time, there could be some major problems because of this, maybe sooner.
I'll just add to that. It's unfortunate that, and I feel the same way when you reflect, but I would also feel to have to make the same caveat. Oh, it's not that I'm anti. Look, the bottom line is this: we have a birth rate somewhere between 1.5, 1.6 replacement rate from our, for children. We need 2.1. That's got to come from somewhere, but that doesn't rationalize the open-ended, especially not understanding how many temporary visas were coming into the country. I mean, that to me is so incompetent that it's beyond. Well, unfortunately, it's not beyond belief, but it really is. Look in the dictionary and incompetent. There's some idiot saying we don't know how many are actually coming in. That's caused tremendous housing problems. And one of the things I've said on Money Talks many times that I think has been validated, you screw with energy, you screw with food, and you screw with shelter, you've got a revolution. We have seen this. One of the things we're so myopic, we think it didn't happen in Canada. It's not happening. Look around the developing nations. Everything I present, by the way, in terms of scenarios about how finances work, you can see it right now. And so you don't have to guess that Nigeria's currency is down about 70%. You don't have to guess what's happening in Egypt right now. We know what it is. So, Benj, I'm just echoing what you're saying, but that doesn't give open-ended. Toronto Dominion Bank came in August of this past year saying immigration turns bad when you don't create the social infrastructure. We already had a problem. Try to get a family doctor, try and go into an emergency ward. I've been told, because I had a bit of an issue, so many times, don't go to emergency unless you're prepared to drop on the ground and scream, So it's not about whether one supports immigration, it's about support doing it, in a realistic manner. And unfortunately, the word realistic or practical are two words that aren't in the lexicon of the virtue signaling public. They always find out after the fact, So I happen to agree it's going to be a pivotal issue. Right now in the US, immigration is the number one issue. It's overtaken cost of living. Well, letting 6 million people in that you don't know who they are will do that. I think we may look back on that as the issue that made the kind of changes at least I perceive are coming. So yeah, but I think it's a shame that we have to introduce it by saying, well, it's not that we think, we can't have an honest conversation about so many subjects. Paul, go ahead. Wasn't that true? Look, I'm gonna change subject and get back to investing for a sec. The big surprise that came to me last year, Martin Armstrong pointed out, when the world has all these issues, right? And, China hasn't been doing well. Problems all over the world. Where does money go? Money goes to places treated the best and safest. And that struck me last year, and he said it again this year. And I think that's what's happening. Like the market is melting. The Nasdaq was up 2% on Friday, in case anybody didn't know this. Like, why is the market melting? I really think he's right. China's not a great place to invest these days. And then you go over to, well, what about Latin America? What about the developing markets? And you sort of add it all up, and people are going to flock to a large cap.
interesting companies in America and whatnot. So I was surprised last year, had a great year last year. I'm a little surprised last week. It went up again. It's melting up. And I guess I'm asking myself, what's going to stop that trend? And it's not clear to me. I think that trend continues. And so why am I in this business of looking for opportunities? You should just buy the Dow Jones, enjoy life.
Well, it's funny, I was asked about you can imagine over the last several years, I mean, I'm proud of the fact that the number one recommendation in Money Talks is to own US dollars, and I'm going back like 10 years. And so I always get asked, well, when's that going to end? I said, well, you tell me what geopolitical conflict ends, and then I'll tell you when that will end. And, geopolitical conflict drives money, as Victor says all the time, looking for opportunity, and they go to the United States. And I still think that, look around, I think that trend still has to be taken into account, if you know what I mean. Let me finish with this question. You've been all doing this a long time. What's the number one investment lesson you've learned? Like, for example, in my case, I learned I'm not there to make the most money. I'm there to make money. So I wouldn't torture myself, especially knowing I knew who I was. That was an important point. It's the old, Brard Brew line. If you don't know who you are, the markets are an expensive place to find out. And so I know who I am. I'm a longer term investor. It's not just age. I've always been sort of risk averse. But I had to learn I'm not there to make the most money, because I'm always joking with Victor. I said, I have missed not so many opportunities that I actually called absolutely accurate in the market. But I might have been able to get it $1. You go, how long are you holding it for, Mike? Well, 5 years. What do you expect? A double. Do you care that whether you got it at 9.50 or 10.50? I had to learn that lesson. So learning that I wasn't there to make the most, just there to make money was one of the big lessons that I've had. So, Paul, do you want to start us off? When you just think you've got a long career, stock picking, managing money, what's sort of the one thing that jumps out at you that you thought, well, I wish I'd learned that a little earlier?
Well, the one thing that has occurred to me is that I'm addicted to this business, right? It's so enjoyable to find a company run by, very interesting, terrific people that are building something. And to be able to meet management teams, I get the pleasure of doing that every day. I'm a whole bunch of companies over the weekend, and it's fabulous. I'm addicted to it. I'm never going to stop, no matter what the markets do. And it's a fascinating thing to do, to be able to jump from one industry to another. Problem is, I think that what did Warren Buffett just say? He's going to give one good idea every 5 years. Oh my goodness, I don't like that stuff.
Great stuff. Ben, how about yourself?
So I touched on it in my presentation. What used to hurt me often in my earlier days of investing in debt loads. And I bought into too many companies with high debt loads that were going up. And to me, I learned to look at companies that had stabilized or the debt load was going down. Apply it on a personal level. The only money that I owe is to Visa. So say if my bill came in now, it would say it's due on February 12th. I post-date a check soon. I'm just going to pay online for it. Old habits die hard. But debt, corporations, governments, individuals, that really hurts. So to me, it's a major, major focus. And I've had people say, wow, you would have made way more money if you weren't so worried about debt. If you bought on margin, etc. It's the old axiom, invest so that you can sleep at night. I don't actually sleep all that well, but it's not because of my debt load. Thanks.
So, some great advice, but the one I would add, if we're going to be investors, is sell your losers and hold on to your winners. And, when you find a winner, let it go. So, like for me, the NASDAQ 100 is going to outperform the S&P 500. It's going to outperform the TSX, and until proven otherwise, don't do that. I spend my whole day talking to people that want to sell Microsoft or sell NVIDIA or sell Meta, and they want to buy something that's broken. Everybody wants to buy a value trap. Everybody wants to buy something. And what you want to do is if you find something, you get a winner, you ride that horse, you ride it. Because it's so hard to find a winner when you get it. You know, this is about, our business is about, it's 24/7. I love it. It's about statistics. It's a lot of work. It's very hard, but when you find one that's working, don't sell it. Ride it.
How long have we gone? I guess what the first thought that popped into my mind is that trading is not a game of perfect. And if you're a perfectionist, don't trade. It don't drive you crazy. By saying it's not a game of perfect, I absolutely am prepared to be wrong on every trade I put on. I know my win-loss rate is certainly less than 50%. And the other things that follow on with that, there's nothing wrong with being wrong, except staying wrong. They all comes to the same thing about managing risk. I just don't have high conviction trades. The trade's a trade is a trade. And it's working or it's not, and I'm gone. And I just, Jimmy's a friend of mine, and I'm kind of opposite of what he was just saying. And like Paul down at the end of the line, I love this business. I'm never going to retire. I'm addicted to it. It was your term, same thing. But part of that is just being able to survive, to stay in the game. And you don't stay in the game if you take big losses and you hate yourself. So you got to forgive yourself, realize it's not a game of perfect. And as my dear friend Peter Appleby said so many times, Victor, there's a rumor going around, the markets are going to be open again next week.
It's funny, Howard Marks, of course, is Oak Tree Capital famous, and he says the number one rule of investing is survival. So he says the number one characteristic is humility. And something that's missing from political decision making, if you notice. I'm not trying to be catty about it. No, I mean they are such amateurs when it comes to making decisions. I personally believe it's because they pay no price for being wrong. I mean, there's nothing like losing some money that will instruct you to pay attention to what you're doing. Look, the other thing I didn't express this weekend is how much I appreciate you coming. How much I appreciate seeing you. I appreciate you listening to Money Talks and support here. It's sincere, and I really do. So thank you all for coming. Thank you to our wonderful panelists with wonderful speakers. And hopefully we'll see you next year.